Hello and welcome. This discussion has been arranged by the experts over at My Tax Accountant. If you're a contractor here in the UK, that phrase inside IR35 can cause a whole lot of confusion and, let's be honest, a fair bit of stress. So today we're going to cut through all that noise and get straight to what it really means for you and your money.
All right, so let's picture this. You open up an email from your client, and there it is. Your contract has been determined to be inside IR35. For a lot of people, that's a real heart-in-your-stomach moment. It creates so much uncertainty, but understanding what it actually means is the very first step to getting a handle on it.
And here's the absolute core of it. It doesn't matter if you're running your business through a limited company, also known as a personal service company. HMRC looks right past that. They look at the actual day-to-day working relationship. And if it looks and feels like you're an employee, they're going to tax you like an employee. Simple as that.
So what does this actually mean for your bank account? The financial impact can be really significant, and once you see the numbers, you'll understand why this is such a big deal for contractors. Yep, this is the figure that makes everyone sit up and pay attention. You could see a drop of anywhere from 15 to 25% in your net pay. That's an immediate, serious hit to your bottom line, and it's why getting your IR35 status right from the start is absolutely crucial.
And it's not just about the lower take-home pay. There's also the risk of an HMRC investigation. If you're found to be non-compliant, we're not talking about a small fine. The average bill, including penalties, is around £50,000. That can be financially devastating.
So why all the intense scrutiny? Well, look at this number. HMRC believes it's losing out on £1.3 billion a year due to IR35 non-compliance. That's billion with a B. And that huge figure explains exactly why they've ramped up investigations, especially in the private sector.
Okay, so with those financial risks crystal clear, how can you tell if your own contract is likely to fall inside IR35? What are the red flags that HMRC is looking for?
When it comes down to it, HMRC's investigation really boils down to these three key tests. First, control. How much say does your client have over your working day? Second, substitution. Do you have a genuine right to send someone else to do the job? And third, mutuality of obligation. Is there an ongoing expectation of work? If you fail these tests, you're in the danger zone. Let's look at a real-world example. Sarah, a marketing specialist, got caught out on the control test. Her client dictated her hours and what tools she had to use. To HMRC, that just screamed employment. The result for her, a surprise £8,000 bill for national insurance. Ouch. All right, let's get into the nitty-gritty of how your pay is actually calculated. When you're inside IR35, your income is processed through PAYE, or pay as you earn, just like a regular employee. So for most of the UK, that's England, Wales, and Northern Ireland, these are the standard income tax bands for the 2025/26 tax year. Your earnings, minus your personal allowance, get taxed as you go up through these brackets. Pretty straightforward. But, and this is a really important but, if you're a contractor based in Scotland, the picture is quite a bit different. As you can see, Scotland has more tax bands, and those higher rates of tax kick in at much lower income levels. It's a crucial difference to be aware of. So let's put that into perspective. Let's say you have a gross income of £60,000. Well, a contractor in Scotland will take home over £1,500 less per year than one in England on the very same income. Your location can directly affect your bottom line. Now, on top of the standard rates, there's another hidden trap that catches so many people out, especially when starting a new inside IR35 role, and that's being put on the wrong tax code, usually an emergency tax code.
Mike's story is a perfect cautionary tale. He was overtaxed by £2,500 just because of a simple admin error. The key takeaway here is you have to be on top of this. Check your payslips every single time. Check your tax code online, and check your P60 at the end of the tax year. It can save you a fortune.
So what can you do about all this right now? How do you go from feeling uncertain to feeling in control? Well, here is a clear 5-step action plan you can follow. Following these 5 steps gives you a really logical way forward. Start by analyzing your contract for those key clauses. Then use HMRC's own online tool. It's called CEST. Be honest with your answers. Next, gather real-world evidence of how you actually work. Then you need to ask your client for an SDS, a status determination statement. And finally, if you have any doubt at all, get an expert review. Okay, you've got the facts, you've got a plan. So, what is the single most important thing to take away from all of this? Where do you go from here? Ultimately, it all comes down to this: being proactive is your best defense. You have to take ownership. A contractor who understands their status, checks all the numbers, and keeps good records is in such a powerful position. That's what separates a prepared contractor from one who gets a very nasty surprise from HMRC. And remember, you absolutely do not have to navigate all this complexity alone. If you need an expert to review your contract or just help you make sense of it all, get in touch with the team at My Tax Accountant. They can give you the specialist guidance you need to move forward with real confidence.